Hello and welcome back. Today, we're dissecting the latest financial report from Nazara Technologies Limited. Nazara is a pretty big name in the gaming and sports media space in India and increasingly globally.
That's right. They've got a diversified portfolio. Think esports with Nodwin Gaming, sports media like Sportskeeda, gamified early learning with Kidopia, and a host of other gaming ventures. They're headquartered in Mumbai. This report covers their audited financial results for the fourth quarter and the full financial year ended March 31st, 2025. The board of directors approved these results on May 26, 2025.
And we'll be looking at both their consolidated and standalone figures today. So let's dive right in. Kick us off with the consolidated top line, revenue from operations. How did Nazara fare in Q4 and for the full year?
All right, starting with the consolidated numbers. For the fourth quarter of FY25, that's Q4 FY25, Nazara's revenue from operations stood at 520 crore 20 lakh rupees. Now, comparing this year over year, it's a significant jump from the 266 crore 21 lakh rupees they reported in Q4 FY24. That's almost double.
Wow, that's a strong yo-yo growth for the quarter. What about quarter over quarter? How does Q4 FY25 compare to Q3 FY25?
Sequentially, looking at Q4 FY25 versus Q3 FY25, revenue was 520 crore 20 lakh rupees, slightly down from 534 crore 69 lakh rupees in Q3 FY25. So, a minor dip quarter over quarter. For the full financial year FY25, consolidated revenue was 1,623 crore 91 lakh rupees, up impressively from 1,138 crore 28 lakh rupees in FY24.
Okay, strong annual growth but a slight sequential dip in Q4. Now, the report doesn't explicitly state EBITDA. Can we look at profit before tax PBT as a proxy for operational profitability on the consolidated side?
Exactly. Since EBITDA isn't directly provided, we'll look at PBT. For consolidated PBT in Q4 FY25, it was 5 crore 74 lakh rupees. Year over year, this is actually down from 16 crore 93 lakh rupees in Q4 FY24.
So revenue doubled YoY for the quarter, but PBT fell. That's interesting. What about the quarter over quarter PBT for consolidated?
Quarter over quarter, the PBT of 5 crore 74 lakh rupees in Q4 FY25 is also down from 19 crore 13 lakh rupees in Q3 FY25. For the full financial year FY25, consolidated PBT was 77 crore 87 lakh rupees, which is lower than the 103 crore 44 lakh rupees in FY24. So a consistent trend of lower PBT despite higher annual revenue.
That definitely warrants a closer look later. Let's move to the bottom line. Consolidated Profit After Tax or PAT.
Consolidated PAT for Q4 FY25 came in at 4 crore 7 lakh rupees. Year over year, this is a significant increase from just 18 lakh rupees in Q4 FY24.
A big jump in quarterly PAT YoY and quarter over quarter for PAT?
Quarter over quarter, the PAT of 4 crore 7 lakh rupees in Q4 FY25 is down from 8 crore 85 lakh rupees in Q3 FY24. For the full financial year FY25, consolidated PAT was 50 crore 96 lakh rupees. This is lower than the 74 crore 75 lakh rupees they posted in FY24. So again, mirroring that PBT trend for the full year.
And how does this translate to earnings per share on a consolidated basis?
This EPS figure needs careful interpretation given the discontinued operations. Let's look at the reported basic EPS from continuing operations. Q4 FY25 is 0.93 rupees and Q4 FY24 was 1.12 rupees, so a decrease there.
Okay, that's a bit complex with the discontinued ops. How about quarter over quarter EPS from continuing operations?
Quarter over quarter, the 0.93 rupees in Q4 FY25 is down from 3.28 rupees in Q3 FY25. For the full financial year FY25, basic EPS from continuing operations was 10.86 rupees, up from 10.28 rupees in FY24.
What about other income on the consolidated front? Was it a significant contributor?
Yes, other income for consolidated results in Q4 FY25 was 18 crore 71 lakh rupees, lower than the 37 crore 69 lakh rupees in Q4 FY24. For Q3 FY25, it was 21 crore 94 lakh rupees. So other income is quite chunky. For the full year FY25, it was 91 crore 53 lakh rupees, up from 79 crore 63 lakh rupees in FY24. This substantial other income likely cushions the PBT and PAT figures.
Right, that makes sense. Now let's switch gears to the standalone financials. How does the picture look there? Starting with revenue from operations?
For the standalone entity in Q4 FY25, revenue from operations was 12 crore 68 lakh rupees. Year over year, this is up from 6 crore 48 lakh rupees in Q4 FY24.
And quarter over quarter for standalone revenue?
Quarter over quarter, it's up from 7 crore 3 lakh rupees in Q3 FY25. So good growth both YoY and QoQ on the standalone revenue. For the full financial year FY25, standalone revenue was 34 crore 42 lakh rupees, up from 23 crore 31 lakh rupees in FY24.
Okay, and standalone profit before tax PBT?
Standalone PBT for Q4 FY25 was 6 crore 37 lakh rupees. Year over year, this is a strong turnaround from a loss of 101 crore 97 lakh rupees in Q4 FY24. That's quite a swing.
Indeed. What about quarter over quarter standalone PBT?
Quarter over quarter, it's also up significantly from 1 crore 40 lakh rupees in Q3 FY25. For the full financial year FY25, standalone PBT was 31 crore 75 lakh rupees. Again, a major improvement from a loss of 91 crore 98 lakh rupees in FY24.
That's a remarkable turnaround for standalone PBT. How does this reflect in the standalone profit after tax?
Standalone PAT for Q4 FY25 was 4 crore 4 lakh rupees. Year over year, this is up from a loss of 105 crore 35 lakh rupees in Q4 FY24.
And quarter over quarter for standalone PAT?
Quarter over quarter, it's up from 1 crore 64 lakh rupees in Q3 FY25. For the full financial year FY25, standalone PAT was 28 crore 4 lakh rupees compared to a loss of 97 crore 50 lakh rupees in FY24.
And the standalone earnings per share?
Standalone basic EPS for Q4 FY25 was 41 paise. Year over year, this compares to a negative EPS of 14.17 rupees in Q4 FY24 due to the loss.
And quarter over quarter standalone EPS?
Quarter over quarter, it's up from 21 paise in Q3 FY25. For the full financial year FY25, standalone basic EPS was 3.50 rupees versus a negative EPS of 14.07 rupees in FY24.
Any significant other income on the standalone side?
Yes, standalone other income for Q4 FY25 was 14 crore 26 lakh rupees. This is lower than the 17 crore 59 lakh rupees in Q4 FY24, but still very substantial compared to its operational revenue. For Q3 FY25, it was 15 crore 31 lakh rupees. For the full year FY25, it was 66 crore 44 lakh rupees, up from 44 crore 56 lakh rupees in FY24. This indicates the standalone entity likely functions significantly as a holding company with investment income.
Good point. Now, let's talk profitability. What can we infer about the net profit margins comparing consolidated and standalone?
For consolidated results in Q4 FY25, the PAT of 4 crore 7 lakh rupees on a revenue of 520 crore 20 lakh rupees gives a net profit margin of about 0.78%. For the full year FY25, it's about 3.14%. These margins are quite slim. On the standalone side for Q4 FY25, PAT of 4 crore 4 lakh rupees on revenue of 12 crore 68 lakh rupees is a very high margin of about 31.86%. For the full year FY25, it's an even higher 81.46%. This stark difference reinforces the idea that standalone performance is heavily influenced by investment activities or non-operational income rather than core operational revenue like the consolidated entity.
That's a huge difference. Were there any exceptional items reported that might explain some of these variations?
On the consolidated side, page 11, there's a loss from discontinued operations of 9 crore 71 lakh rupees for Q4 FY25, 11 crore 57 lakh rupees for the full year. There are also impairment losses of 16 crore 46 lakh rupees in Q4, 31 crore 78 lakh for the full year. These would definitely impact the PBT and PAT. For standalone results, page 21, impairment losses of 5 crore 94 lakh rupees were booked in Q4 FY25, which is the same for the full year.
Okay, let's get a glimpse of the balance sheet. Any key highlights from the consolidated or standalone balance sheets as of March 31st, 2025?
On the consolidated balance sheet, page 12, goodwill is substantial at 977 crore 39 lakh rupees and other intangible assets are at 630 crore 58 lakh rupees. Investments accounted for using the equity method are 94 crore 97 lakh rupees, with other investments at 16 crore 76 lakh. Total equity stands at 3,237 crore 34 lakh rupees. There are also assets held for sale amounting to 103 crore 95 lakh rupees. On the standalone balance sheet, page 22, investments are the dominant figure at 2,147 crore 18 lakh rupees. Asset classified as held for sale is 97 crore 47 lakh rupees, which, based on the notes, is likely their stake in OpenPlay Technologies, which is being sold to Moonshine Technology and Associate.
Acha, how about the cash flow situation for the consolidated entity?
Looking at the consolidated cash flow statement for FY25, pages 14 and 15, net cash generated from operating activities was 65 crore 50 lakh rupees, down from 90 crore 79 lakh rupees in FY24. Net cash used in investing activities was a significant 1,133 crore 95 lakh rupees, an increase from 603 crore rupees used in FY24. This is largely due to acquisitions and other investments. Net cash generated from financing activities was 804 crore 92 lakh rupees, mainly from proceeds from the issue of equity shares, compared to 946 crore 27 lakh rupees in FY24. Overall, there was a net decrease in cash and cash equivalents by 263 crore 53 lakh rupees during FY25. The closing cash and cash equivalents stood at 298 crore 85 lakh rupees. The report doesn't mention any dividends paid during this specific period in these financial statements.
All right, let's shift to segment performance on a consolidated basis. Nazara has gaming, esports, and ad tech. How did these segments perform?
According to the Consolidated Segment Report, page 13, for Q4 FY25, gaming revenue was 156 crore 41 lakh rupees, with a segment result PBIT of 19 crore 72 lakh rupees. Esports revenue was 217 crore 11 lakh rupees, but it posted a segment loss of 11 crore 47 lakh rupees. Ad tech revenue was 147 crore 90 lakh rupees, with a segment profit of 2 crore 40 lakh rupees. For the full year FY25, gaming revenue was 518 crore 17 lakh rupees, with a segment profit of 57 crore 83 lakh rupees. Esports revenue was 763 crore 42 lakh rupees, with a segment loss of 22 crore 4 lakh rupees. AdTech revenue was 345 crore 57 lakh rupees with a segment profit of 69 lakh rupees. Capital employed is highest in esports 795 crore 52 lakh, followed by gaming 672 crore 53 lakh, and then AdTech 143 crore 82 lakh. However, the note mentions changes to internal organization affecting reportable segments, so direct comparison to past detailed segment structures might need care. The previous structure had real money gaming, freemium, telco subscription, and gamified early learning under a broader gaming umbrella.
So, esports is a big revenue generator, but currently loss-making for the year. Gaming seems to be the profit engine among the segments. What's the overall performance summary and any context for these trends?
Consolidated performance shows strong year-on-year revenue growth for both Q4 and the full year. However, PBT and PAT are down for the full year, and PBT is down for Q4 year-on-year as well, despite higher revenue. This suggests margin pressure, higher operating costs, or the impact of impairment and discontinued operations. The substantial other income has helped the bottom line. Standalone performance shows a significant turnaround to profitability, largely driven by non-operational/investment income rather than its limited operational revenue, fitting its role as a holding entity. The esports segment's loss, despite high revenue, is a key area to watch. AdTech is growing revenue but with very slim profits for the year.
Now, a critical part. Any significant notes or events we absolutely need to highlight, especially that GST show cause notice mentioned in the auditor's report.
Yes, this is crucial. Consolidated Note 8, page 16, details show cause notices (SCNs) received by two subsidiaries, OpenPlay and HalaPlay, and two subsidiaries of an associate, Moonshine Technologies (SBN) and BNPL, from the GST authorities. The total demand for Nazara's direct subsidiaries is around 111 crore 93 lakh rupees for OpenPlay and 27 crore 42 lakh for HalaPlay. Plus, the SCNs for the associate subsidiaries are even larger. These relate to the contentious issue of GST on gross bet value versus gross gaming revenue and the applicable rate. Management's view is that these notices are arbitrary and no present or future liability is anticipated, so no provision has been made in the financials. This is a significant contingent liability. Other notable points: Consolidated Note 9 mentions that Q3 FY25 comparatives were revised due to Ind AS 103 adjustments for intangible assets from business combinations. Standalone Note 13, page 24, confirms the sale of 94.86% stake in OpenPlay Technologies to Moonshine Technology. This is classified as asset held for sale. Standalone Note 17, post-year-end, Nazara's resolution plan for acquiring Smash Entertainment was approved by the NCLT in May 2025. Standalone Note 19 details the investment by Aksana Estates and Plutus Wealth Management LLP, which triggered a mandatory open offer for an additional 26% stake in Nazara. This received CCI approval in May 2025. Annexure D, page 28, details the scheme of amalgamation of Paperboat Apps Private Limited, a wholly owned subsidiary, with Nazara Technologies, with the appointed date changed from October 1, 2024 to April 1, 2025.
That GST issue is definitely a big cloud. Now, let's talk about the auditor's report itself for both consolidated and standalone results. What did MSKC and Associates have to say?
For both the consolidated and standalone financial results, MSKC and Associates LLP have issued an unmodified opinion. This is explicitly stated in Annexure B, page 26 of the submission to the stock exchanges. However, for the Consolidated Auditor's Report, page 4, there is an emphasis of matter paragraph. This paragraph draws attention specifically to Note 8 of the Consolidated Financial Statements, which is about those significant show cause notices for GST dues received by subsidiaries and subsidiaries of an associate. The auditors highlight the amounts and the management's assessment that no provision is required. An emphasis of matter paragraph means the auditors concur with the company's accounting but believe the issue is so fundamental to users' understanding of the financials that it needs to be highlighted. It does not qualify their unmodified opinion. The Consolidated Audit Report also mentions page 6 reliance on the work of other auditors for 25 subsidiaries and 2 associates, whose financials reflect a significant portion of assets and revenues. Similarly, page 7, it notes that unaudited financial statements were used for 12 subsidiaries, 3 associates, and a joint venture, though these are stated as not material to the group.
So, an unmodified opinion, but with a very important emphasis on those GST notices. That's a key distinction. What's the general outlook for Nazara based on this, and what are the key risks?
The outlook for Nazara shows a company in a high-growth phase, especially evident in its consolidated revenue and aggressive inorganic expansion via acquisitions as seen in the investing cash flows and standalone notes. The gaming segment is profitable. However, risks are significant. The GST demand is the elephant in the room. If the authorities' view prevails, it could have a massive financial impact. The esports segment, despite high revenue, is currently loss-making. Turning this around will be key. Integration of acquisitions is always a challenge. Nazara has been very active here. Profitability on the consolidated operational front, excluding other income and before impairments, needs to improve to match revenue growth. As always, investors should do their own due diligence and consult with certified financial advisors before making any investment decisions.
That's a very balanced view. So, to conclude, Nazara Technologies has shown strong consolidated revenue growth for FY25, but profitability has been a mixed bag, impacted by segment performance, impairments, and discontinued operations. The standalone entity's turnaround is notable but heavily skewed by non-operational income.
Precisely. The gaming segment remains a key profit driver. The ad tech segment is growing, while esports needs a path to profitability. The major overhang is undoubtedly the GST contingency highlighted by the auditors. While the opinion is unmodified, that emphasis of matter is a serious flag for investors to consider. The company is also actively restructuring and expanding, as seen with the Smash acquisition approval and the Aksana investment triggering an open offer.
Lots of moving parts for Nazara. Thanks for breaking down these complex numbers and notes for us.
My pleasure. It's definitely a company with an exciting growth story, but also some significant risks to navigate.
And that's all the time we have for today. Join us next time for another deep dive. Don't forget to like, share, and subscribe if you found this helpful.